Gold rebounded above $5,000 an ounce as bargain hunters chased precious metals after a historic collapse from last week's record highs, over 5,500. Let's get more on this from Tony Ciero, Vice President and Senior Portfolio Manager at Caldwell Securities. It's good to have you join us. Thanks so much.
Good morning, Lindsay. How are you?
I'm good. I hope you're good as well. Okay, so
I am.
Good. Gold up today. I'm wondering, is this a case of investors kind of buying in the dip? What do you think?
Well, we saw gold pull back last week in about 10 to 13% on the announcement of Trump's recommended choice for next Fed chairman, Kevin Warsh. And apparently he's more hawkish. He wants to strengthen the U.S. dollar. He was against the quantitative easing program back to settle with the financial crisis. So a little bit more bullish kind of mentality. And that weighed in on investors thinking that as the U.S. dollar declined, the price of gold had appreciated. But going forward, if the U.S. dollar increases because interest rates are going higher, then maybe the price of gold was overvalued. I think some of those fears have been subsided. We're still believers in gold, even at these levels. We're seeing a nice rebound there. Long term, we do believe the U.S. dollar will weaken and that the gold prices will continue to appreciate.
What's interesting, though, data compiled by Bloomberg today is showing that gold has become more volatile than Bitcoin, the 30-day volatility climbing above 44%. You're nodding your head. You knew that. So we're still going to see volatility, though, probably throughout the year. Do you think?
Yes, and volatility creates great buying opportunities. If you have a position or a firm stance that an asset will appreciate given the reasons behind it, then when you see a dip in price, there becomes a good buying opportunity. Again, long-term forecast, at least on our end, is we think gold will appreciate because the U.S. will continue to look to weaken its currency, and that will be a good driver for gold. As a side, Bitcoin, though, the volatility in there, I think at the height it was 125,000 last year. We're seeing it settling around 75,000 now. Bitcoin is more geopolitical driven risks. And as soon as you see a risk-off environment, your riskiest assets will be sold first. So whoever holds Bitcoin, those are probably the first things to go down. And we're seeing a little bit more geopolitical tension out there, in particular with Greenland, what's happening in Venezuela. So these are giving some potential investors in Bitcoin selling opportunities.
Okay, we'll keep watching that. But in the meantime, let's turn to earnings because we're right in the middle of earnings season. It was a big week. We've seen Microsoft, Meta, Tesla, Apple all reported. Any big takeaways or anything that you really noticed throughout these earnings reports we're seeing so far?
Yeah, we're focused on the big tech earnings because that's been driving the U.S. stock markets over the last couple of years. And so far, between the four that I mentioned, we've seen a mixed bag. Microsoft reported the results were good, but capital expenditures were a lot higher than expected. So we saw a pullback on price there, about 13%. Tesla as well, the sales of their cars have slowed down and they've discontinued their Model S, X, and X. And that's weighed down on investors as well. But on the flip side, we've seen Meta do quite well and Apple. Apple recorded highest iPhone sales in history. So good potential there.
And Alphabet, of course, reporting tonight after the close. What are you watching for when you see this report come out?
Yeah, Alphabet. Well, first, we believe the earnings will be quite good. But it will be the outlook on the AI monetization, in particular their Gemini product, which is their AI kind of large language model that provides you a research engine that enhances what Google used to do in the past. And if there's ways that they can monetize that going forward, then that's what we're looking for. And then we can see a good pop in the stock there.
Okay, so we've got a couple of stock picks to go through. I know we were just talking about Microsoft, but you like Microsoft, obviously.
Yeah, we see that it was oversold. Granted, yes, capital expenditure was higher in the quarter than the forecast had predicted. And also free cash flow came down. It's not negative, but it came down. That means, and as we know, Microsoft has committed so much future spending on the AI build out That means if you don't have the free cash flow to commit to the spending, you have to borrow. And when you borrow, then insolvency ratios come into play. Revenues will potentially decrease because your borrowing costs. But the way we look at it is it was temporary. Yes, expenditure was a little bit higher than forecasted, but sales in their Azure cloud computing platform could have been even better if they had put all their GPUs, their graphic processing unit chips, towards that division. But they did not. They strategically aligned some towards their Microsoft 365 Copilot, which is their AI-powered assistant program based on their product. So when you subscribe to it, you get enhanced Word, PowerPoint, and Excel functions. So they put some of the GPUs there, and they're starting to see an uptick in subscribers there. So they're starting to monetize the AI vis-a-vis their Microsoft 365 Copilot. So we saw something like 15 million paying subscribers to Copilot out of a pool of about 450 million users of their Microsoft Office product suites. So there's potentially a lot more that they can tap into a revenue source going forward there. And that's why we like the company going forward. And plus, a good buying opportunity now.
And we'll have to be quick with this last one because we're running out of time. But Cenovus Energy is your other pick. I know they've been in the news recently for a worker killed at an oil sands site and another one injured. Does that do anything to the company, really? Obviously, it's unfortunate.
A good example of that, Suncor a few years ago slumped because there was some safety issues around their employees. So that could potentially be a drawback, but it's up today and it's up about 15% year to date. Basically, they took over Meg Energy late last year, and we're starting to see the synergies there in terms of higher production. They also have a few other growth projects. One that completed last year, Narrow Lakes, out of the oil fields or oil sands in Alberta. And one anticipated to come onshore later this year, is the White Rose just outside of Newfoundland there. So this will increase production going forward. And hence, we think Cenovus right now is undervalued and a good buying opportunity.
Okay, that's all the time we have. Tony Ciero, Vice President, Senior Portfolio Manager at Caldwell Securities. Appreciate your time. Thanks so much.